What's up, troops? So in today's video, we are going to cover how to actually become a profitable trader in 2025. In this video, we're going to cover mindset, strategy, and profits. How to adopt the right mindset, have the right thoughts and beliefs when you're coming into trading, how to actually build a strategy that works and is actually going to generate you good returns over the long term and not just a short term, let's see if I can make a little bit of money. And then also profits. What is the best vehicle to use to allow that strategy to make us the most money that we possibly can? So before we go on, please listen to me. please listen to me. I see so many people giving out the wrong advice, people doing the wrong things. This advice is coming from somebody who has been in the game for over 10 years now. I've been a full-time trader for the last 10 years. I've helped thousands of traders actually become profitable, and it's all through doing what I'm going to tell you in this video. Nothing more, nothing less, exactly this process. I have so many people come to me, they've been struggling with their trading for years, and it is simply down to doing these things wrong. So without further ado, let's get stuck into things. So first and foremost is mindset. If you have been struggling with your trading, it is probably because you've come into trading with the wrong mindset. You thought that you could be placing 5, 10, 15 trades a day and still be profitable. Wrong. You thought that you could just roll a dice and see what happens and gamble and still make money. Wrong. That is not how you can do things and still be profitable within your trading. So let me share my screen. In order to adopt the right mindset within your trading, you have to think about things in the right way. And often when I speak to traders, they're thinking this way, the reality is this way, and it's often the complete reverse. It is often the complete opposite of the way that you're thinking now is how you should actually be thinking. So first things first, trading is boring and it should be boring. If trading is exciting, you're doing it wrong. We are not in Vegas, we're not rolling the dice, we're not playing blackjack. 90% of your trading should be you sat here doing absolutely nothing. You should be sat here doing nothing, sitting on your hands, doing something else. And if it's not that, you're doing it wrong. You're doing it wrong. 10% of your trading should be actually trading. The problem here is people can't sit and wait and be ready to pull the trigger. They just have to pull the trigger. People sit there, they can't keep their fingers still, and they end up just placing trades. And again, it's largely because they don't have the right strategy, which we'll get on into just a moment. But you have to understand that the majority of the time, your job is to sit there and do absolutely nothing, waiting to pull the trigger. I've used this analogy a lot. If you want to become a profitable trader, you need to adopt the mindset of a sniper, not of Rambo. You can't just run in there with a machine gun and start spraying. It's never going to work. You're going to get killed. You need to operate like a sniper. You're waiting for your target to come in your crosshairs, and when it does, you're going to pull the trigger. We are snipers, we are not Rambo. You have to remember that. And listen, like, so many people have this mindset because very often they start their trading journey through trading signals. You're going to be in that signals group, they're going to be sending you 5, 10, 15 trades to place every single day. You end up losing money, but you still have that mindset that there's that much opportunity in the market. And it's absolutely impossible to be profitable if you're trading that many times a day. And it's hard enough to be profitable trading once a day, let alone 5, 10, 15 different times. So you have to remember that patience is the game here. And it is and should be boring. Number 2, and a slightly more advanced way of thinking, but we'll get onto this in just a moment. But you need to start thinking in probabilities and not opportunities. There's tons and tons and tons of opportunities that could theoretically give us an opportunity to make a bit of money. But that is just a gambler's mindset. We need to be assessing things in probabilities. If I look at a trade, I want to understand, okay, well, if I place this specific trade 100 times, what is the probability of me actually making money over those 100 trades? This isn't a roulette wheel type of game. This isn't a slot machine type of game. We're not just chancing this. If we're chancing this, we're gambling. And if we're gambling, we're not going to be profitable over the long term. So we need to think about every decision that we make in probabilities. What are the odds that if I place this trade, I'm going to be profitable? And if we can't do that, if we don't know how to do that, we're falling at the first hurdle. It's so important. And I think if we can adopt just these two ways of thinking, a lot of our problems are going to start to go away. Everyone thinks that trading is about building the right mindset, and then when you have the right mindset, you're going to be profitable. Unfortunately, it's not like that. We have our ways of thinking and our thoughts and beliefs, but ultimately that's going to manifest into how our strategy is put together, and then our strategy is going to allow us to have the profitability. But we have to think right, and we have to come into this with the right thought tracks in order to even take the next step in the correct direction. So that's mindset covered. I mean, there's not a lot to mindset really. I mean, mindset is, a lot of people say that trading is 90% mindset. That's not true. That's definitely not true, because if you don't have the right strategy, you're never going to be profitable anyway. You could have the best mindset in the world. If you haven't got the right strategy, it's just never going to work regardless. So you can't put all of the blame on mindset, but you have to think about things in the right way in order for your strategy to actually put the odds in your favor. So just take these 2 points on, and it will make sense when we go into strategy, which we're going to go and do now. So strategy, what is important about our strategy? Again, I see people going wrong time and time again. You must trade with a strategy proven via data and statistics to provide with an edge over the markets. If you do not have this, or if you don't know what this is, you are gambling, plain and simple. The line can be blurred very easily between trading and gambling. Often people think that they're trading, they're just gambling. But you need to ensure that you have an edge over the markets. If you don't have that, you just cannot rely on your trading strategy to provide you with consistent long-term returns. It's just impossible. It just does not happen. But as well as that, as well as having an edge, you must have clear mechanical rules to follow. I mean, you could go and collect a load of data, but if you can't then replicate that data because you don't have clear mechanical rules to follow, I mean, it's just pure discretionary trading. I mean, you can have an edge trading discretionary, but it's far more difficult, and it can just change in an instant. You could just slightly change the way that you've done things, and then all of a sudden your data just drops off a cliff. So it's absolutely crucial that not only do you have an edge proven via your data and statistics, but that edge has been comprised through clear, simple mechanical rules to ensure, as you'll see here, because ultimately, inconsistent actions will lead to inconsistent results. Consistent actions will lead to consistent results. So the strategy that we trade must come with these clear mechanical rules to ensure that our actions are consistent, which ultimately leads to consistent results. It's so important. If your strategy is discretionary, I mean, your trading process can change every week, every month, every quarter, every year. And therefore, the data that you are collecting is not going to be true. So consistent actions are incredibly important. I have traded the same strategy for years now. Every single trade that I've placed has been exactly the same. Why? Because I have clear mechanical rules that I follow day in, day out. My job is not to analyze the markets and find trades. I'm not looking for opportunities. I'm following my rules day in, day out because I've proven those rules via data and statistics. So my job is very simple. It's just to follow those rules. It is that simple. It is that simple. Now, what do those mechanical rules look like? So very simply, a mechanical strategy is going to comprise of a very short process, a very short sentence to allow you to identify the trades that are going to give you that edge. So when X happens, you enter at Y with your stop loss here, your take profit there, and you walk away. That's it. And if you cannot put your strategy into a short sentence like this, and a couple of steps, then it's likely because you've implemented far too much discretion into the way that you do things. if you're on this time frame, that time frame, then you're on that time frame, then you're on this pair, then you're on this asset. You're trading currencies, then commodities, then equities. That process is always changing. And if that process is always changing, what are you doing? You've got inconsistent actions, and that's why you've got inconsistent results. But if your actions are consistent, you can then prove those actions through data and statistics, and then that is where you get those consistent results. So clear, simple, and repeatable rules that you stick to. When you stick to them, you have consistent actions. When you have consistent actions, you have consistent results. And when you have a set of mechanical rules, you can then test from that data whether you have an edge. So vitally important, right? Being able to look at that data and clearly see what your win rate is, what your average risk to reward is, then allows you to identify if and to what degree of an edge you have. Again, if I ask you the question now, what is your win rate and what is your average risk to reward? If you can't answer that question, you are gambling. And if you're struggling with consistency and I ask you, what is your win rate? What is your average risk to reward? There is your problem. Because if you don't have this, you're not a trader. Plain and simple. So with that in mind, let me share my data. So over my trading, with the particular strategy that I've been using for the last few years, I have a win rate of 68%, and my average risk to reward across all of those trades is 3.8. So 1 to 3.8 risk to reward. Now, obviously this comprises of trades that are losses. This comprises of trades that are higher than a 3.8, but the average win or the average risk to reward that I obtain through my trades is a 3.8. Which means that over 100 trades at 1% risk, my net return is 226.4%. Okay, very clear data to tell me that if I place 100 trades with these mechanical rules, right, and bear in mind, this is following a set of mechanical rules, so the trades don't change. Every single trade that has gone into my data is following the exact same rules. I haven't moved the goalpost, I haven't done anything different. It's the same pairs, it's the same rules, it's the same percent risk. That has never changed. Because before I went and traded these rules live, I went through the process of actually testing them to understand if I follow these rules over 100 trades, will I actually make money? Okay, and so many times people get this wrong, right? If you're trading live and you don't know this, I mean, you're in heaps of trouble. And this is the root cause as to why you're losing money constantly. If you're on a demo account and you don't know this, fine, okay, but we're still in the process of learning this. But if you don't have this before you go live, like I said, you're in a whole heap of trouble. You're gonna lose money hand over fist. That account balance is gonna go down and down and down. You're gonna top the account up and guess what it's gonna do? It's gonna go down and down and down and down again. So if you cannot tell me the answer to these questions, you're not doing things correctly. And anybody that's telling you to do anything different to this, I mean, there's no argument against this. If you don't have this, you're gambling, plain and simple. So from this, I can then also obtain my expectancy. So I know that I'm expecting to make, on average, 2.264R per trade. So at 1% risk, that's 2.26%. Now, it's important to know this because this is essentially the definition of your edge. What are you expecting to make per trade? And obviously this is the average, right? You're not just going to make this on every single trade. This is going to be spread across a large portion of your trade. You're going to get losing trades, you're going to get break-even trades, you're going to get some wins that are big, you're going to get smaller wins. But you need to understand this, right? And if you're going to take this away and look at this information, a little bit of a clue here as to what you should be aiming for. I mean, not necessarily aiming for, but if you have an expectancy of over a 1.5R per trade, you have a really, really good strategy. Really good strategy. Anything lower than a 1, I think you're treading a little bit close to the edge. I mean, a lapse in performance can put very easily put you down into negative territory. But anything above a 1.5 R per trade is good. It's good. And I mean, so all you have to do is go into ChatGPT, give them your numbers, and they'll tell you this. I mean, the calculation for it is a bit complicated, and I couldn't do it on a calculator if you asked me to, but just stick your numbers into ChatGPT. Say to ChatGPT, I have a 68% win rate with my strategy. My average risk to reward is a 1 to 3.8. What is my expectancy? And it will tell you this. It will tell you what your expectancy is. And then that is what your edge is. It's super, super important to know this. If you don't know your numbers, I mean, it's like having a business and not understanding what your numbers are. You don't know what your profit is. You don't know what your costs are. You don't know what your overheads are. I mean, if you don't know that, you haven't got a business at all. Because, how can you possibly forecast anything without that information? It's really, really important. And I guess the key thing here is, I mean, a lot of people will lean on their knowledge to do the heavy lifting. They do a lot of analysis, they break down things, they do, hours and hours worth of back testing, just playing around on the charts, and they're leaning on themselves and their knowledge to do the heavy lifting. But once you've got a set of mechanical rules with data to back those rules up, you can just let your strategy do the heavy lifting. You don't need to come to the markets every single day and analyze everything in tons of detail. All you need to do, once you've got this information, is just follow your rules. You wait for the setup. If it's there, you take the trade, and if it's not, guess what you do? Go back to what I was talking about with mindset. You sit there and do nothing. You practice your patience, because again, we're operating like snipers here. We're waiting for our target to come into our crosshairs before pulling the trigger. We're not just here just trying to find trades and try and make a trade up that's constantly changing. Sometimes we're trading with an indicator, then we're trading with an area of supply and demand, then we're trading support and resistance. When you have discretionary trading and your process changes all the time, you can't expect to make any money because you don't have an edge over the market. Without an edge over the market, you're just gambling. And if you're gambling, you're not making money either. So it's very, very important. Again, if you go through this process and you truly understand and you put the work in beforehand, your strategy is going to do the heavy lifting for you. You're not going to have to spend hours and hours and hours every single day trying to battle the markets. You can be patient and you can pull the trigger when those rules are met. So really, really important. You have to get your strategy to this point. And what that then does is it allows profits to come to us. We're not there chasing profits and trying to find profits. We're not on the roulette table rolling that dice constantly and trying to get lucky. We have the edge. So all we have to do is follow those rules and let that data play out over time, and the profits are going to come to us. So like I was saying, with that data, we can forecast and actually understand our numbers. So let's say, for example, here, my expectancy is a 2.264 R per trade. If I'm wanting to go and pass a funded account, so with FTMO, let's say you've got to make 10% phase 1, 5% phase 2. So I need to make 15%. With my numbers in hand, I can have a level of expectancy as to how long it's going to take me to pass this account. So I need to make 15%, divide that by my expectancy. So theoretically, it's going to take me pretty much 6.3 trades to pass this funded account. Now, obviously, time of this is going to come down to how long it takes you to see 6.63 trades. It's also going to come down to how that data is going to be distributed within that period of time. Sometimes you're going to get this data in, let's say you have 3 trades a week, it's going to take you a couple of weeks to get the account passed. But if that data is being distributed and you might have a bit of a down period in the markets, it might take you a little bit longer. But you come to the market with some level of expectation. You have the confidence and conviction in what you're doing, and you have the trust in your process. So you know that as long as you do follow your rules, the averages tell you that you will ultimately be profitable over a period of time that is going to be, to some degree, if I take 3 trades a week, it's going to take me a couple of weeks. It might take me 3 weeks, might take me 4 weeks, but it shouldn't really take me any longer than that because I have the expectancy. I understand how my strategy delivers trades to me. So it's super, super important. Super, super important to have these things. So again, just to recap that. we have 3 core things that we need here to actually become a profitable trader in 2025. Number 1 is the right mindset, right? You have to come into this and think about things in the right way. You have to manifest that way of trading that is going to be conducive of you actually turning a profit. So understand this is going to be boring, and understand you have to talk in probabilities from the get-go. Understand here that your strategy must be proven via data and statistics, and you must have a set of mechanical rules on hand to ensure consistent actions so you can see consistent results. If you look at a sample size of even 10 of your trades and they look different, they're following different rules, they're using different concepts, you're already losing. You're never going to be profitable like that. Make sure that all of your trades look exactly the same. Have the data in front of you, understand your numbers, and when you've got those numbers, you're going to have the confidence and conviction to utilize that strategy to go and generate profits. Super, super important. So again, if you've been struggling with your trading, it is likely down to one of these things. You don't have the right mindset. You don't have a strategy that provides you with an edge over the market. And quite simply, you're not using the right vehicle once you've done that to actually see returns. I mean, even if you have an edge and you're not using something like a funded account, because you're trading with such a small amount of capital, if you're trading with £1,000 and you're expecting to make 5,000 a month, does your strategy and do your numbers actually align with that? You have to break them down from the top down. Reverse engineer whether the expected results that you're having are actually feasible based on your numbers. So I'm going to leave that one with you. As always, any questions, please, of course, let me know. I'm not going to go into any more detail with this. Inside my community, inside my training, inside my mentorship, I actually give away my exact strategies. So this exact strategy that gives me an expectancy of 2.26 for R per trade, I give those rules to all of my students. So if you're looking to get any assistance with your trading, you don't want to go through this process yourself and you want plug and play systems, click the link in the description below, go and check out my free training and schedule a call with one of my team, and we'll give you all of the information that you need. But I hope this one has helped you. Listen, it might be daunting. You might be looking at your trading now and thinking, Jesus, I've been doing this for years and I haven't even thought of any of this. Just scrap everything you're doing, start from the basics again and build the right foundations from now. It will pay you dividends. I mean, this is not that long of a process. If you really focus for a good few months, you're going to get this down. And as long as you follow this, you will have an edge over the market and you will be able to consistently pull money from the markets. So like I was saying, I hope you've enjoyed this one. As always, any questions, just put them in the comment section below and I'll see you in the next one.